Amid rising prices and economic shifts, it's easy to feel overwhelmed and uncertain about the future. We've all felt the squeeze of this shift with the economy, watched prices soar, and jobs shifting, and wondered if there's a roadmap to not just weather the storm, but to emerge on the other side thriving. As we navigate through this challenging terrain, it's essential to equip yourself with practical strategies and simple steps to have a successful year and secure your financial future despite the shift in the economic landscape. And that's what we are going to look at in this video. Step 1. Financial education with the mindset of the new economy. First things first, you've got to arm yourself with knowledge. The rules of the game may be changing, but understanding the basics remains crucial. Start by getting a solid financial education. And I don't mean a degree in finance. You don't need an MBA to understand how money works. What you need is a practical understanding of the financial landscape, especially in this new inflated economy. Start by familiarizing yourself with the basics of personal finance. Understand budgeting, saving, and the power of compounding interest. There are fantastic online resources like YouTube channels that break down financial concepts in a way that doesn't feel like you're studying for a final exam. The twist here is embracing a new mindset to match with the new economy. In this new face of the shift of the economy, inflation is a reality we all can't ignore. Instead of fearing it, embrace it. Understand that your money's purchasing power might decrease over time, and that's okay, as long as you're strategic about where you put your cash. Keep an eye on emerging markets and industries. The game has changed, but the principles of success and smart investing remain. Knowledge is power, and in this case, it's the power to navigate the new economic landscape successfully. Step 2. Lay the foundation. Now that you've armed yourself with financial education and a new mindset, it's time to lay the foundation for your wealth-building journey. Start by creating a budget that conforms with what you earn every month to audit your monthly finances. It's not about restricting your spending, rather, it's about understanding where your money is going and being able to make intentional decisions and choices that match with your current finances. Tools like budgeting apps can make this process a breeze, helping you categorize your income, savings, debts, and expenses, and identify areas where you can cut back if needed. Having the knowledge of where your money goes, using the budget, identify how much you have in your savings and how much you owe in debt. Having this in mind, the first thing you will do is start by paying off your high-interest debts. Credit card debt interest can drown you if not addressed early, as the longer you take to pay them off, the higher interest you are bound to pay. So, allocate a portion of your income to aggressively pay down these debts, starting with the highest interest rates first. This might mean cutting back on some luxuries, but it's a sacrifice worth making. Budgeting and paying off your debts is just one side of the coin. The other side is building a robust emergency fund savings account. In an inflated economy, unexpected expenses can hit harder than a plot twist in your favorite movie. This fund isn't for splurges, it's your financial buffer in case life throws curveballs and unforeseen circumstances like medical emergencies, car repairs, or sudden job loss occur out of nowhere. Having an emergency savings account allows you to make strategic decisions with your money, like seizing investment opportunities or weathering economic downturns without going into panic mode. Set a goal for your emergency fund, aiming for at least 3 to 6 months or 12 months worth of living expenses. Treat this fund like a sacred treasure, as it's your financial shield, giving you peace of mind and financial resilience in the face of life's uncertainties. Step 3. Let your money work for you. Use it as a tool to become rich. All right, you've got the basics down. Now it's time to put your money to work. Think of your money as a versatile tool that can build wealth over time, and not only a means of exchange. So, how do you unleash the power your money has? Investments. Now, I know the word Investments might sound intimidating for some people, but it's simpler than you might think. Imagine planting seeds in a garden. You water them, nurture them, and over time, they grow into fruitful trees. That's the magic of investing. It's about planting your dollars strategically so they can multiply and work for you while you go about your daily life. I made a video a while back on why money does grow from trees and how you can make your own money trees. So if you are interested in knowing different money trees, I have linked the video down in the description box. Once you have started investing, diversifying your investments is key to spreading out the risks that come with investing, as everything you do in life has risks, and finding ways to navigate and reduce life risks is paramount. Diversification is like having a variety pack of snacks rather than just one type. If one doesn't taste good, you've got others to enjoy. Apply the same principle to your money, spread it across different investments. Maybe some in low-risk investments like index funds or ETFs, a bit in higher-risk ones like stocks or real estate, and perhaps a pinch in gold or silver. By diversifying, you're not putting all your eggs in one basket, thus reducing the risk of losing everything if one investment doesn't perform well. Let's break this down with numbers. Say you're putting aside $200 a month for investing, starting with low-cost index funds as a beginner, as it's like buying a tiny slice of the entire stock market. Over time, these funds historically grow at a steady rate, and the beauty is that you don't need to be a Wall Street expert to benefit. The key is consistency, like watering those seeds regularly. Keep investing month after month, and watch your financial garden flourish. Now, compound interest is the secret sauce. It's like the interest on your interest, creating a snowball effect. Let's say you invest the $200 a month for 10 years with an average annual return of 7%, and at the end of those 10 years, you'd have over $33,553. This is not an unrealistic number based on historical stock market performance, as one has to start small. And as your income grows, you may increase the amount you invest. That's the power of using your money as a tool and letting it work for you over time. It's not about having a fortune overnight. It's about planting those seeds early and watching them grow into mighty oaks. So start planting and let time do the heavy lifting. Remember, it's not just about accumulating money, it's about accumulating assets. These assets, whether they be stocks, mutual funds, real estate, or other investments, are the building blocks of your financial empire. So use your money strategically, diversify wisely, and watch your wealth grow steadily over the long haul. Step 4. Change how you earn money. Now let's talk about your income, as it's not just about saving and investing, it's also about how you earn. In the new economy, traditional job structures are not the same as they were 3 to 5 years ago. Everything is changing, and a lot of layoffs are being experienced all around different companies and businesses. So with the shift of how to earn money with this economy, relying solely on a 9-to-5 job may not be the best strategy for building substantial wealth. It's time to diversify your income streams and embrace the concept of multiple revenue channels. Start by exploring side hustles or passion projects. Is there something you're good at or truly enjoy doing? Whether it's freelance work, consulting, or turning a hobby into a small business, these side gigs can bring in additional income while allowing you to do something you love. Investing is also another way to earn extra income. If you've got some capital saved up, consider putting it to work in areas beyond traditional investments that we have talked about. This could involve investing in startups or becoming a silent partner in a business venture. The goal is to create income sources that are independent of your primary job, providing additional financial security. Get to learn and develop current in-demand skills that are essential. The job market is evolving, and having expertise in areas like editing, digital marketing, coding, or data analytics can open up new opportunities. Continuous learning is the name of the game. Attend workshops, take online courses, and stay ahead of industry trends to remain relevant in a dynamic job market. Remember, the more diverse your income streams, the more resilient you become to economic shifts. This is about creating a financial safety net for yourself, making sure you're not overly dependent on a single source of income. So, get creative, explore new opportunities, and let those multiple income streams flow into your wealth-building river. Step 5. Stay calm and adapt to change. In the unpredictable terrain of the new inflated economy, the ability to keep a level head is your greatest asset. Economic fluctuations are inevitable, and they can be unsettling, but the key is to resist knee-jerk reactions. Whether it's a sudden market dip or unexpected job loss, having a cool-headed approach can make all the difference. Instead of panicking, view challenges as opportunities to reassess and recalibrate your financial strategy. By maintaining emotional composure, you're better positioned to make sound decisions that align with your long-term goals. Adaptability is the other side of the coin. The economic landscape is evolving rapidly, and clinging to outdated approaches may hinder your progress. Stay informed about market trends, emerging industries, and new investment opportunities. This proactive mindset ensures that you not only survive economic shifts but thrive amidst them. Remember, staying calm and adapting to change isn't just a financial strategy. It's a life skill that empowers you to navigate uncertainties with resilience and confidence. Embrace change as an inevitable part of the journey toward financial success, and you'll find yourself better equipped to weather any storm that comes your way.